Hey everyone, it's Brandon with USA Reverse Mortgages again. Wanted to do a quick video, an update on the HUD proposals we've been talking about kind of a lot lately. So we're still in that comment period where HUD is asking for comments from reverse mortgage professionals as far as lenders, investors, senior advocacy groups, all that stuff. They extended the period. They're still asking for comments, not sure exactly which of their proposals they're going to follow through on. I'd like to just throw a couple out there for you that could really affect your ability to be able to qualify for a reverse mortgage. So one is the 80% residual income rule. Okay, so right now there is a rule for residual income saying that you need to have X amount of dollars left over at the end of each month after you pay all your bills. Okay, so for a single person it's around $500. For two people, a couple, it's around $1,000. So they want to see you have $500 or $1,000, depending on how many you are, left over at the end of the month after paying all your bills. Now, it's important to mention that does not count your mortgage payment because your mortgage payment will no longer exist. So it encompasses things like minimum credit card payments, property charges, your homeowner's insurance, your property taxes, your HOA payments if you have them, and your utilities, stuff like that. Okay, so in the past, if you were short of the number you needed to hit for residual income, you can use things like compensating factors, asset dissipation. Like if you have a bunch of money in the bank, you can say, hey, look at all this money I got in the bank. And they can say, well, that would pay for X amount of years of your taxes and insurance, so we'll use that to offset how low you are in your residual income. Now, you can still do that with things like investment accounts, cash in the bank. In the past, you've been able to use reverse mortgage proceeds. So for instance, let's say your residual income was $300 a month and it needed to be $500. Yet with the reverse mortgage, you're getting $200,000. Well, they would be able to dissipate those assets and, they don't really do anything with them. You get the full amount of the money, but they're counting it as if it's income, divided over a certain number of years that they calculate. So, FHA is proposing a rule where the only way that you'll be allowed to use reverse mortgage proceeds as assets to dissipate is if you reach the 80% mark of the residual income. Okay, so if the residual income mark for two people is $1,000, you need to show you're making at least $800 of that. Because of things like the utility calculation that they use, it's harder and harder to do that. So that's going to hurt some clients, obviously, who will no longer be able to use those reverse mortgage proceeds for asset dissipation unless they reach that 80% mark. The other thing, which in my opinion is actually even scarier, is they're also talking about, so right now, if they decide you need a set-aside, a lender-enforced set-aside for your taxes and insurance, because they've deemed you, not fit to pay your own bills, basically, if you've got a bad history of paying those payments or mortgage payments or, in some cases, credit card payments. It depends on your credit history. They hold back a certain number of years. If it's a full set-aside, they hold back 12 years worth of your taxes and insurance, and they make those payments for you. They did push out a proposed rule change where they may want to include your utilities. So you're already getting hurt because they're taking a bunch of the benefit that you would have gotten as cash or tax-free cash or payments or whatever you want to use it for, setting it aside and saying you can't touch this. We're going to pay your property taxes and homeowner's insurance with it for 12 years. Now we're going to add 12 years worth of your utilities. I'm of the opinion that this rule probably will not go through, mainly because obviously all lenders are saying it's a bad idea, but so is AARP. And when lenders and AARP get together and agree on something, normally HUD listens, because it's kind of both sides, the salesman and the representative for seniors in general, people who it benefits say it's a bad idea. So I just wanted to go ahead and let you know that these things still are in the works and are both possible. As soon as I get an update as far as what HUD has decided they are going to do, we'll update you here. Okay, so keep in tune for updates and more videos. And as always, you can call or email us, message me on the website, let me know if you need help with anything. Obviously, we do reverse mortgages and can help you originate your reverse mortgage at the best price of any lender that you're going to find. Or if you just need information, always let me know, okay? Thanks a lot. Hope you have a wonderful day.